again with another of our Evolution Consulting market updates. This one being recorded the 20th of May 2016, just after market close, about 5 o'clock. And after this week, as you might imagine, guys, it is a smoking flight. Egad, is all I got to say about this week. Oddly enough, I did record one of these on the 18th and chose not to publish it, not surprisingly, right after the Fed minutes came out, because I couldn't seem to get through a 15-minute market update without dropping a couple F-bombs. So I figured might as well wait to simmer down, as they say, before I recorded one of these. But nonetheless, as you guys can tell from that, okay, we are out of here, as the animals once sang. We got to get out of this place, and that's exactly what we're doing. So oddly enough, I've had the inane therapeutic opportunities, I like to say, to ponder the Fed's minutes and so forth, while wrapping up about a mile and a half of computer wire. It's been very exciting, with a little bit of help from the Evolution Consulting development team, of course. That being said, guys, so here we are at the end of another week of trading. Yikes, egads, take your pick, choose your adjective for this week, but it's been very interesting, all right, and obviously we saw, talk about the big one first. The Fed comes out and they threaten to sort of, maybe, kind of, sort of, in theory, possibly, kind of, raise rates in June. And based upon our Evolution 4.0 research, it ain't going to happen, guys. It's just not, okay? You know as well as I do, when even the big banks get sick of a Fed chairperson, their days suddenly become very numbered in office. Okay, and I think that's finally what's happened with Janet Yellen and company, is that it's one thing for a presidential administration to say, okay, you might want to lay off, but when the big guys, your Goldman Sachs, your J.P. Morgans, and so on, when it becomes very obvious, along with the major networks, that they have absolutely no confidence in her and they're just sick of her nonsense, her days are numbered and she knows it. Okay, so as far as I'm concerned, the biggest goal for Ms. Yellen at this point is to step down as Fed Reserve chairperson, or just get out of that office of Fed Reserve chairperson without getting her face kicked in. Okay, it's really, that's what it's come down to. Between the pressure inevitably from places like the City of London with their metals exchange and, of course, Shanghai Gold Fix, basically what we've come up with, guys, and what we've discovered is as such. We've talked extensively about metals market manipulation, okay, and the fact that the remaining bloody chunks of the Anglo-Western banking system that largely centers around the Federal Reserve, the only way they can prevent those metals values from increasing at this point, guys, is very simple. There's only so many naked shorts you can dump on the market, okay, before it just doesn't work anymore, before it becomes obvious as to what they're doing. All right, so now they've reverted to the last thing that they have to stop the inevitable. And at this point in time, it's almost laughable. It really is, as I've often used. It's like standing in front of the tank in Tiananmen Square. Eventually, you're going to become a combination of pavement filler and track lubricant, shall we say. But nonetheless, the strong dollar is really, or the threat of the strong dollar, okay, is the last line of defense they have against metals prices just running. And, of course, for those that have been following along, obviously the higher metals go in terms of spot pricing, be that silver or gold, okay, obviously that's kind of the tell that there's absolutely zero confidence left in the U.S. dollar and U.S. dollar-denominated securities, U.S. dollar-denominated debt, etc. Okay, so what we're seeing now is the Federal Reserve skating in almost an Occam's razor, if you will, of a strong dollar and completely imploding the markets, revealing that what we've seen in the last few years has been a groundless recovery, or a jobless recovery, or a recovery that lacks any major fundamental economic reasoning. Okay, so that's the corner that they're painted into. Effectively, is that based upon our analysis and based upon the analysis of plenty of other economists that are out there, guys. Okay. At this point in time, the only thing that they have left that they can do is try to artificially prop up the dollar, which is like, okay, because we haven't seen that before, right? Okay, that's number one. Number two, the only other thing they can do to really get the market to respond, and it's going to, okay, is threaten to raise rates and then don't. And threaten to raise rates and then don't. Because what they've discovered is that has almost the same effect as a rate cut or lowering interest rates before the day and age of ZIRP, zero interest rate policy. So really, guys, at the end of the day, it's very simple. The only way that they can quote unquote stimulate the market and still look like they're trying to do anything meaningful, all right, is to threaten to raise rates. And then when June rolls around, and of course they won't. And guys, the writing's already on the wall as to why they're not going to. You get the Brexit coming up. Okay, so whatever it is that's going on in the Brexit, that's the other half of the Anglo-Western banking system, the euro dollar, which at this point in time has taken the lead for currency that's probably going to implode before the dollar. Because it's looking more and more, despite the media manipulation that's going on, it's looking more and more like England is going to do an exit stage left, okay, from the EU. Now, if that happens, based upon our analysis, and it's not the first time we're saying this, we've been saying this as early 2015, or we've been saying this as early as 2015, I should say. You know who's following England right out the door of the European Union? Germany. And if you don't think that's true, just take a look at Merkel and her situation over there, okay? She's got an increasingly pissed off German population over there that's suddenly getting very militant and very nationalist, okay? And that's going to send chills up and down the spine of some groups, all right? But nonetheless, England leaves. I think I have to say the guerrilla economist whose show I did during our test of concept phase may have said it best. It's like sitting down at a crappy dinner, okay, and waiting for somebody to stand up so you could be the first person behind them going, we got to get them out of here, okay? And that's kind of what it looks like Germany's getting ready to do. Is if the UK does an exit stage left, Germany's right behind them, and there goes the two most economically and financially stable nations in the EU effectively out the door. And what do you got left? You got a big debt circle jerk, all right, for lack of a more polite way of putting it. Like I said, I've calmed down since the 18th, but still. Nonetheless, but as far as the markets go, guys, some of our picks are still doing very well. Those that got long Taser, either subscribers to Wirehouse or those that have been following along with these market updates. I mean, Taser's just rocking in the free world. It's up over, what did I look, 21. It cleared $20 yesterday, I believe, and then 21.70 today. So that's one example, guys, of the chaos plays just working. I mean, it's the inevitable will happen. There will be those currency collapses. There will be that civil unrest. There will be that mayhem. Okay, and you see companies like Taser now, as we accurately forecasted in one of our pieces. I think it was the video update, as a matter of fact. We mentioned that the robotics industry is going to be huge for Taser. It's going to be another kind of potential uptick. And a couple of days ago, China unleashes its first so-called crowd control or riot control robot, and not surprisingly, it's equipped with a Taser-like device. So how long do you think that's going to take to become either SOP or experimental in the United States? So we were fairly accurate in forecasting. Same thing can be said for FLIR. Before doing this recording, I didn't see what FLIR was at. But so a lot of those chaos plays you're doing fairly well. Even not that UWTI is a chaos play, that's a commodities play. But for those that bought the petroleum report, we said long oil in mid to early April, because going into summer driving season, we're going to see oil come up back through the $45, $50 a barrel, $55 a barrel range, and not surprisingly, it's been as forecasted. It kind of happened. So those that were the UWTI play, that's looking good. But some of the other stuff that's out there, by the way, a special salute to those that have been investing in those triple leverage, the GDXJs and the JNUG. First of all, for those of you guys that have been following along, know that we're kind of offering up a final exam, if you will, to the Evolution 4.0 system. We installed a variety of some of the HFT algos or the day trading algos that we had built explicitly and purposefully for the Evolution 4.0 system. Now, some of them are from Evolution Ultra, but we said we're going to try to double a $100,000 portfolio using only equities, without using options, without using anything. We're going to try to double a portfolio in 30 trading sessions. All right, now that got off to a great start, by the way. Okay, we were up, I think it was like 6 or 7 days. We were up like 35%. We were like, yeah, this is cool. And then we started seeing things getting a little bit wonky. We changed out one of the algos, and literally today, guys, we gave back or started yesterday, we gave back literally I was 35%. It was just we were back down to the original 100, and we even went under it a little bit. But we reinstalled, some of the other algos that we had laying around. We had one that's kind of like, we call it the secret weapon. We were like, yep, now would be good. So we went ahead and installed that. We're back up well above where we started. So that was a wild ride, huh? Especially, and we could have very easily, and we made a mistake with one of the installations. So That cost us a little bit as well. And, it'd be very easy for us to turn around and say, oh, it was a programmatic error. It's a do-over. And we were like, no, that's not our style. What do we got? We got Fed minutes moving, those spot prices of gold all over the place. We're disconnecting half our stuff here and moving it, all over the place. It's like, we're simulating real-world trading conditions. So, no, guys, we're not doing it. We're not doing a do-over for that. So, as far as guys that have been in those commodity plays, if you're day trading them and if you're intraday trading them, we understand, man. It's been wild out there. Okay, so just keep on keeping on. Those spot prices of metals are moving higher. If you're doing what we're doing, you're trying to get it going both ways. All right, it's rough. For the last week we've been on just JNUG and NUGT, and watching some of the movements in that has been like, one of these things. So, but for those of you that are in those trades, the USLVs, the SLVPs, GDXJ, NUGT, JNUG, USLV, I know, guys, it sucks when you open up your portfolio and you're like, what the hell happened? All right, but if you're in those for those 30, 60, 90-day trades, let the spot price of metals recover. Based upon what we've seen, we mentioned that 1280 to the high 1270s was going to be the kind of the Shanghai Gold Exchange's new artificially low high for metals. Guys, we were $10 high on that. I mean, we saw it hold that 1270 range for over a week. All right, then we had obviously the nonsense with the Fed come out, and then it was like, that'll recover back up to those 1270 levels, probably with a little bit of momentum through, which would set up for June, okay, which is within our 30-day trading window that we have. That would set up for June when the Fed doesn't come out and raise rates. Look for a humongous pop on a lot of those, on obviously spot price metals, and then the associated ETFs and the ETNs. But yeah, I mean, I know if you're on those for the 30, 60, 90 days and you open up, you're like 20%, 30% down. All right, we get it. It's not fun. Hell, we did that in a day and a half. All right, so that being said, hang tough with those guys. All right, those commodities plays are where it's at, because one of the things that we have since discovered is anytime the market goes spastic the way it has, all right, if it goes spastic, it's usually that kind of 1 or 2 days of what the hell is going on, and then all of a sudden it's a reversion to something simple. It's a reversion to some sort of economic fundamentals, which is usually, as we've seen, commodities. So I'll be quite honest with you, very forward in our simulated trading account, guys. We're long JNUG through the weekend because we know those spot prices of metals are going to recover. Okay, the Shanghai Gold Exchange does not look fondly upon moves like the Federal Reserve pulled with we might sort of kind of raise rates. And again, when you see big banks and you see the major networks that are coming out and they're just going like, what, Janet went full retard. Don't ever go full retard. She went full retard. Okay, so once those big banks, those institutions have enough of your nonsense, she knows her days are numbered now. Okay, and if she can get out of there without getting dead, it'll be a miracle. Metaphorically speaking, of course. But that being said, guys, in terms of any of the other plays that we have going out there, especially the stuff we talked about, the 30, 60, 90-day stuff, just hang tight. We're going to ride it higher. And one thing I would like to point out is if you had CNBC tuned in, which I do often in the background because I find it comical and it's just interesting to see the difference between what we're seeing with Evolution 4.0 and then listen to the narratives on CNBC. One of the things that we find quite comical is that the Fed doesn't really foresee any kind of inflation. There's really, we may have to, sort of curtail inflation a little bit with a rate hike, right? Guys, inflation, I've said this a million times, inflation doesn't make an appointment. Inflation doesn't make reservations. It just happens. Okay, and if anybody doesn't believe that, go look at a Zimbabwe dollar chart. Okay, it's not like it started slowly. It just kind of happens. Okay, so at the end of the day, we know there's going to be that inflation. We know that's what's fueling capital markets. We know there's going to be a heap of U.S. dollars, both in liquid form as well as in securities and specifically bonds and debt securities, plowing back onto the shores of the United States. Because let's face it, guys, and this is another one that V said best, the number one export of the U.S. for the last number of years has been the U.S. dollar. Really, that's about it. So with the as far as the petrodollar goes, that's something else. I promise I will do a video on that soon. How the petrodollar plays in. For those of you that would like the absolute super duper detailed version of that, we encourage you to purchase the podcast, the Evolution Consulting Petroleum Report. Okay, we actually have not released that for sale yet, but we will be doing so very soon. But insofar as where we're at, guys, just do a market review. We wanted to do one more before we evacuated the bunker, as we like to call this place. Um, so just again, hang tough with those plays. If we have a couple of new things coming down the pipeline that you guys would be interested in that we've done as far as the 3 C's of investing. And by the way, for those of you that read Wirehouse last month, you know exactly what the 3 C's of investing are and why the hell that approach just makes so much sense. And we've already seen proof of concept with that with Taser and with Smith and Wesson with Ruger, and also in some of the commodity stuff. But a wild week, guys, wild week. And like I said, we'll keep everybody posted on our simulated doubling a portfolio using only equities in 30 trading sessions, self-imposed final exam. But we got to wheel all this stuff out of here. We got to get gone. So we'll be broadcasting from a brand new shiny new location, as we like to say. But on that note, guys, hope you're enjoying these. As always, I have fun doing these. And I find it to be a creative outlet and somewhat therapeutic. I get to rant and rave here and there. So that being said, guys, again, if you have any questions, okay, info@evolutionconsulting.world. And we do encourage you to email us, info@evolutionconsulting.world. All right, and then we got, of course, our Twitter, which is @EvoConsultants. Should be over there somewhere. @EvoConsultants, Evo_consultants. Follow along on Twitter, because when there are Fed minutes released and major economic news like that, we do tend to get in fairly rare moods. And on that note, guys, be good. Everything's a transaction.